makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, attention firmly on today's Fed rate decision, with the first expected since last December. Now, here in the UK, the focus on Windsor as President Trump begins his state visit. Many big investment pledges have been made, but the UK shelves a push to axe tariffs on British steel. There's also news on TikTok's US future, as well as Eli Lilly's obesity pill. A lot to discuss when it comes to the markets and the Fed. I'm delighted to be joined by Joyce Chang, JPMorgan's Global Research Chair, who joins us now. I'm so happy you're in London, Joyce, and what a day here to have you on. What are you expecting, actually, from the Fed? 25 basis point cuts, and then we have a bigger idea of what happens next?
I think you're going to get 25 basis point cuts. You could get some dissents here because you've had signals for 50 basis points from a few of the governors. But 25, I think, is really done after the August employment came out. It became very clear that they're going to really take a look at the employment mandate. But I would just still emphasize that inflation remains sticky here. So I do think it's 25 basis points.
Joyce, I mean, we understand. I mean, it's a little bit odd also because you have Stephen Mirren, who just got confirmed, but he doesn't have a dot because I think they were done before, so there's no time to put it in. Are we going to have a three-way descent that murks the picture of what the U.S. economy looks like?
I think you will have some dissents in this one because 25 basis points is the way that I think that they will go. But that's not unexpected in the marketplace. That seems to me that it's been signaled for the last couple of weeks. But I think the market is looking at the labor market slowdown right now and that we have a jobless expansion. When we look at the numbers globally, it's actually some of the lowest job growth that we've seen globally since about 2011. So I don't know if the market's going to really focus so much on the descent. They're focusing on a shift from inflation to the employment mandate, but still that inflation remains high here, so you can't really go that aggressively.
So what are you seeing in actually the jobs market? Again, if you look at the private sector remains pretty healthy, but then those numbers were ugly.
Yeah, well, I mean, there is the immigration factor as well, and then there's the slow job growth. And it is an expansion that is really fueled by a lot of the fiscal and business investment that's going on rather than the job gains. And so I think that you will see that the 25 basis points and subsequent cuts are something that the market very much is anticipating. And I don't think you're going to see a huge change in the dots here because 4.3% unemployment, the 1.4% growth is really where we're tracking right now.
What are you expecting after today?
So we think that you're still going to get 25 basis point cuts at the subsequent meetings, but looking at about 100 basis points in total. So, I mean, that's still relatively moderate as far as what we're looking for in the cycle.
Okay, Joyce, hold that thought because we'll also get back to Fed independence, and I have a couple of questions on tariffs. Then Microsoft, OpenAI, and other American companies have announced plans to spend tens of billions of dollars on technology infrastructure in the UK. Now, they're part of a series of business deals that coincide with President Donald Trump's visit to the nation, which officially begins today. He's due to meet King Charles at Windsor Castle in the next few hours. He's left Washington. As he left Washington, President Trump said the UK was hoping to make deals over tariffs and trade.
They want to see if they can refine the trade deal a little bit. We made a deal, and it's a great deal. And I'm into helping them. Our country is doing very well. We've never done this well. We're having trillions of dollars coming because of the tariffs. And they'd like to see if they could get a little bit better deal. So we'll talk to them.
Lizzie Burden is in Windsor. So, Lizzie, London and Washington putting so much emphasis on the business deals they will sign during this visit.
Yeah, they're hoping that the pomp and pageantry translates into business deals. We're here in Windsor Castle, this 11th century fortress, not, of course, the usual venue for a state visit, but this isn't Donald Trump's first. He had his first state visit back in 2019, and this is a second unprecedented state visit. Look, the hope is, as I say, that the soft power turns into hard cash, and we're expecting $10 billion of economic deals to be announced by the president, including including on defense technology cooperation and nuclear partnership. The Financial Times reporting that there could be closer cooperation when it comes to digital assets. Although I have to say, Francine, there is an ocean between the US and the UK when it comes to crypto regulation. So there'll be really pressure on London to get a move on there. But we'll see the president flanked by the biggest bosses of Silicon Valley, the likes of OpenAI's Sam Altman, Jensen, Huang of Nvidia, and already the investment pledges are coming through from Google for £5 billion when it comes to AI spending, $30 billion pledged from Microsoft when it comes to a supercomputer. So a lot of money on the table, but not necessarily good news for all sectors when it comes to tariffs.
So we're not expecting good news in every sector, with no progress, for example, on steel tariffs.
Exactly. 25% tariff appears to be what Keir Starmer is accepting when it comes to steel. That's lower, of course, than the 50% that other countries are accepting on their steel exports, but it's higher than the zero that Starmer promised and touted, and that is the criticism from the Conservative opposition. Why did you tout zero when it wasn't guaranteed from President Trump? Well, Starmer would say that at least there's certainty, even if it is a blow for businesses. We're also having our expectations managed when it comes to Scotch whisky tariffs. Doesn't look like there'll be a lot of wiggle room there, despite all of Starmer's lobbying. So we await to see where the wiggle room that Donald Trump promised in that clip actually lies. But look, Trump knows that Starmer doesn't have a lot of leverage here. This visit couldn't come at a worse time for the UK Prime Minister. He's languishing in the polls behind Donald Trump's friend, I might add, Nigel Farage, the Reform UK party leader. And in just the past 2 weeks, Starmer has lost 3 from his government, including the UK ambassador to Washington, Peter Mandelson, who would have had an integral role here. But it's over his links to Jeffrey Epstein. And Epstein, of course, is the thread between both Starmer via Mandelson, the King via Prince Andrew, his brother, and Donald Trump himself. So that could make for some absolutely painful small talk later.
Lizzie, it certainly is. Lizzie Burden there with the very latest from Windsor. Now we're back with Joyce Chang from JPMorgan. Joyce, I mean, we'll all be glued to the screens because it's always, pretty impressive to see these state visits. There's also a number of chief executives that will come from the US. But what do you think that the focus on when it comes to tariffs? Have we seen the worst of tariffs impact on the economy and on markets?
I think the observed tariff rate so far has only been about 10%, and we think you're at about a 16% effective tariff rate, and that's likely to stick here, irrespective of what the Supreme Court decides. So that feed through to inflation, I think, is still to come. I mean, that worst of that is still to come. But I think markets are accepting this 15% tariff. And we're also seeing that there have been a lot of exemptions. So, like, for example, we were just talking about the steel tariffs. But in Brazil, if you take a look at the 50% tariff, there's about 700 exemptions and 42% of the exports are exempted. So tariffs are here to stay. 15% is sort of in the assumption right now. That hasn't fed through to inflation yet, but it hasn't been all at once. And I think you will have that the Supreme Court could very much uphold what the U.S. Court of Appeals has decided on.
Joyce, overall, I mean, there were so many questions about, what Donald Trump and the Trump administration are trying to achieve with these tariffs and what kind of economy do they want. We seem to be a little bit wiser, actually, into the template of what they want to achieve.
Oh, yeah. I think there is some rationality that's actually emerging, even though it's been chaotic the way it's been rolled out. There have been 3 pillars that the Trump administration has been very clear on, that the tariffs are just one part of this. The more important piece of it is this reshoring and investment flows into the U.S. And if you just go through the White House website, you tally out a number that comes out to over $8 trillion. Now, how much of that will happen? But the truth of the matter is there is some more investment flows that will be coming from that. And then the third pillar of that is, that there are certain sectors that are critical and strategic that also need different kinds of protection. So those are the 3 pillars that I think have been very consistent in all of the discussions on the tariffs that we've seen.
I mean, a lot of question marks over central bank independence, but medium term, actually, short to medium term, the market is ignoring it. How do you see, again, the Trump administration trying to test the limits?
Well, I think for this meeting, the focus really has been on the August employment numbers, the labor market, with 25 basis points seen as justified and not a politicized decision, even if you get some dissents asking for more. I think the market is looking at the Federal Reserve Act. You require 60 votes to overturn, so they think that is very unlikely. But the market still cares very much about the Fed independence. So, I mean, there is sort of a wait and see what happens, because there are so many different things that are going through the courts right now. But I think as far as the vulnerability to the Federal Reserve Act itself, that is something where it's seen as remaining intact. I think there are broader questions that are coming out about, will the Fed's mandate, have a narrower scope to it? So less capabilities on the enforcement side going forward.
Joyce, let's also, of course, get up to date with what's happening with TikTok. Bloomberg understands that Oracle and Silver Lake are among the companies that will acquire TikTok's U.S. operations under the deal that's been agreed between American and Chinese officials. Let's get more on the details with Roz Matheson, our chief Asia correspondent. So, Roz, what more do we actually know about the deal?
So what we understand is that you have three companies potentially taking stakes here. You'd have Oracle, you'd have Andreessen, Horowitz, you'd have Silver Lake. The exact breakdown of those stakes and the total price tag is yet unclear, but what would happen as part of that is ByteDance stake drops below 20% and potentially below that threshold that would cause national security concerns. And then as part of that also, they need to help migrate all those millions and millions of American users onto a new app. And ByteDance would have to help with that and use their technology to do so. But the idea is they go into something that replicates the experience they're having now, but obviously separate from where they are operating at this point in time. And under this deal also, we know that Oracle would have to continue to provide cloud services to TikTok. That's a big, important part of the equation for TikTok. But you do get that separation that would go on in all of this. And those details, as I said, that are still very unclear. But what it would do is put this potentially to bed as a real sticking point between the relationship between the US and China. And that's obviously what Xi Jinping and Donald Trump want to talk about on Friday and come out of that call saying, yes, we've finalised the understandings around this and now we can move on to the broader trade relationship, because, of course, they want to get to the point where they can meet in person later this year in Asia and have a proper summit and come out of that with a different understanding around trade going forward. So getting TikTok solved in a way is the first step in that broader relationship and that reset that both of them seem to want at this point.
Ross, thank you so much. Terrific briefing, as always, Ross Matheson. Joyce, when you look at, again, this also goes back to the fact that, Donald Trump and President Xi will speak on the phone. Are you seeing a normalization of, of trade between the two countries?
I do think that both sides want to have a summit before the end of the year, and both sides want to show progress here. Now, I would stop short of calling that a long-term reset, but I think it could include TikTok. It could include a lot of the things that we saw under the first Trump trade agreement, purchase agreements as well. And maybe it includes, some relief on some of the tariffs, like the fentanyl tariffs as well. But I think you're still going to have a very high tariff rate remain in advance. But I think both sides have been working towards having a summit that will be seen as having something in it that both sides really feel is moving forward. I wouldn't call it a long-term reset. I think there are just strategic issues that mean this is going to be a longer-term issue that lingers. But I think a summit by the end of the year is something that's likely to happen.
How should we look at China right now? And actually, is the bigger question how we should look at AI right now? Does it change the way that you view the economies in 12, 18 months?
Well, but I think that China is feeling pretty confident about its industrial supply chain right now and its AI strategy. All of that said, still, we see China's growth slowing in the second half of the year. The property sector is still a very big drag. If you look at the three arrows that China has on the policy side, I mean, you have rates at 1.2%. You can't do that much there. You have a very large fiscal deficit. So they still need to do a lot more structural reforms. But I think you do see a summit. I think you will see that on both sides want to highlight where there has been progress that is made. But a slowdown in China does seem to be coming in the second half of the year, irrespective of what's going on with these trade talks.
And how much do you spend actually looking at how AI transforms our economies?
So I think that transforming the economies in the hard data, that is not yet showing up. Yeah. But if you look at the investment numbers, so take a look at the S&P 500. There are 30 AI companies. It's 43% of the market cap, and the R&D and the capex alone for those companies is $800 billion this year. So we are really looking at the capex and the R&D that is still going in the U.S. and China on both sides. The hard data yet is not showing the productivity gains, but we're still very early stages, my point is, in the investment cycle here.
So interesting. Joyce, as always, such a great pleasure to have you in the studio.
Great
Joyce Chang there, JPMorgan's Global Research Chair. Coming up, we speak to the Chief Executive of the Bourse operator Euronext about the outlook for European markets. That's next, and this is Bloomberg. Welcome back, everyone. European Bourse operator Euronext set to join France's blue chip CAC 40 index next week. Now, Euronext operates exchanges in several countries and has been on a buying spree to expand. In his latest move, or its latest move, it actually made an offer in the summer to buy the Athens Stock Exchange. Well, we're joined by Stephane Boujnah, the chief executive of Euronext. Congratulations, you're entering the CAC 40. What does it mean?
Well, it's a recognition of the huge efforts deployed by all the teams for the past 10 years. I mean, we have consolidated teams, products, projects, expertise from now almost 8 countries. And we are the living proof that Europeans can succeed together rather than failing separately. And I mean it. I mean it because we also demonstrate that even if the group is super diversified now, less than 40% of our top line is done in volume-related revenues, less than 20% in equity trading. We do believe that equity markets do matter to finance the real economy. Exchanges, public markets do matter to connect local economies with global markets. So we remain probably among all the exchanges the ones who are the most committed to financing the real economy, to providing equity, own funds to projects to finance risk. And I think this is a defining moment for us, and the entry into one of the group of the most liquid, the most valued companies listed in Paris is the proof of that success.
Stephane, talk to me a little bit about volatility, how much Euronext has actually benefited from volatility in asset classes, and how you expect volatility to continue or not.
Well, volatility has been very strong since the beginning of the year. On equity, we are plus 20% versus 24, which was a good year versus 23. On fixed income, we are plus almost 50%. So, and almost three quarters of the year are already in the bag. So we are confident that for the foreseeable future, this volatility will continue. We have a sort of engine on the other side of the water in Washington that provides permanent volatility on markets. And So I'm confident that it will continue. Clearly, the beginning of the year, we won't have, hopefully, many liberation days with this type of volatility. But
famous last words. But Sven, I mean, is this only a good thing if there's volatility, or is there danger because actually people IPO less? Is it a net benefit, or is it net-net?
The trade-off is that volatility brings volumes. But volatility can create two downsides. One is pressure on valuations, and the other one is delayed IPO and delayed listing. But overall, I think markets tend to adjust to volatility trends and find safe harbors or moments to list companies. But listing is a small part of our business. Trading is a bigger part of our business, but the vast majority of our business, 60%, has nothing to do with volumes or with trading.
Listing is a temperature check, right? It means that people, that they're animal spirits. How are you expecting that pipeline to go?
Well, we have a thick pipeline. I'm cautiously optimistic. It's true that many companies are ready to go public now. It's true that private equity funds are touching the limit of continuation vehicle 1, continuation vehicle 2, and that public markets, which is a liquidity of last resort, is going to become more a mainstream scenario for private equity funds. So I'm cautiously optimistic, and I'm confident that for the end of the year and definitely 26, we will have a renewed pipeline.
But the private market role is huge and getting bigger. So when you have conversations with CEO that say, look, maybe I want to IPO, but I also have this big offer, like how are they thinking about it?
No, the world has changed fundamentally for the past year. Clearly, the conditions on the debt market, the situation of the private equity players who have to organize liquidity events because the vintages of the companies bought in 2021 are at very high valuation are touching the limits of the sense of humor of investors. Clearly, the environment has changed, and the promise of private equity is revisited because of the surrounding circumstances, prospects of growth of the underlying assets, complexity of build-up, and the financing. Just the cost of debt is an acid test of growth prospects in terms of value creation.
Now, you mentioned tariffs. I mean, and everything has changed since Liberation Day, but also maybe since the last eight to 9 months. Do you see any physical move of assets away from the U.S.?
Yes. We are observing that. It's documented by many players. I think even Bloomberg wrote about that several times. We are observing in all markets, not only assets moving from the US to Europe, but assets, and it is more important, from the rest of the world, deciding to allocate a bigger chunk of their strategic allocations in Europe versus the US in the past days.
Significantly?
Yes. I mean, you look at I was in Asia recently, or in the Gulf. You can see people in these parts of the world who tell us we were allocating 5% to Europe, we moved to 10%. And it's still small, but it's twice more than what they were allocating before. So Europe is perceived by the rest of the world still as a safe harbor, maybe with a slightly lower yield than in the US, but with a much better risk return.
I mean, France is definitely in the limelight at the moment because of the rating agency, because it seems to be very difficult politically to find a budget. Does that influence actually appetite for your share?
Not really. You know, there is a new prime minister. We have a minority government. It's very common across Europe. Sébastien Lecornu is trying to build a sort of a de facto coalition, like any minority government does across Europe in similar circumstances. It's new in France.
Difficult. It's new in France,
it's
right?
It's new in France because we have been used to a sort of a binary majority system. It's new in France, but we are going to go through that. And Sébastien Lecornu has all the talents, the energy, and the skills to engineer, to craft this minority government.
Does it hurt French companies?
Well, not really. You know, blue chip companies in the CAC 40 like us are extremely exposed to the global markets, to the rest of the world. Most of those companies do 5% of their business, 10% of their business in France. So the real cost of uncertainty marginally affects the cost of debt, marginally for the moment, but not fundamentally on their growth prospects. So I'm very bullish.
Any acquisitions on the table? Any acquisitions that you want to make?
Yeah, as always, but in order for me not to go to jail, you will be the last person with whom I will share it, and I will announce it when I'm allowed to do it.
Perfect. So as soon as you announce it, we can agree that maybe we get an exclusive, but give me a sense of where you want to grow without anyone going to jail.
We have two streams. M&A is a tool. The objective is growth and profitability. We consolidate in Europe exchanges that want to join or single liquidity pool or single order book or single technology platform, which, by the way, trades today 25% of the equity in Europe, which is twice the size of the London equity markets today in terms of average daily volumes and in terms of aggregate market capitalization. The Euronext single European market is twice the size of the London equity market. The other option or the other stream is to diversify our top line. And that's what we are going to do and that we are going to continue doing in post-trade, in solutions, in SaaS businesses, and in corporate services.
Stephane Boujnah, thank you so much for joining us. That was the Euronext Chief Executive. Coming up, we'll be joined by Jim Bianco. Of course, we talk about Fed. We talk about the independence of the Fed and interest rates. This is Bloomberg. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. The Fed is in focus as traders, but the central bank will cut interest rates for the first time this year. President Trump is in the UK as pledges worth tens of billions of dollars pour in from US tech giants and other American corporates as they join him on his second state visit. Plus, Bloomberg learns that TikTok's US operations will be sold to a group including Oracle, Silver Lake, and Andreessen Horowitz. Now, the Fed widely expected to cut interest rates by a quarter point this evening, but much of the attention ahead of this week's FOMC meeting was focused on who would be voting, with Lisa Cook fighting to keep her job, while President Trump's nominee, Steven Mirren, was fast-tracked onto the board. Now, with us now is Jim Bianco, president of macro strategist at Bianco Research. Jim, so happy to see you. The perfect day to speak to Jim Bianco. I mean, when you look at central bank independence, but the fact that now you have both Lisa Cook and Steve Mirren voting, does that kind of like flaw what we're looking at this evening?
No, I don't think it does. I think the Fed is set to cut interest rates by 25 basis points at the meeting. The drama, if you would, at the meeting is going to be how many dissents they're going to get. There's a case to be made that there might be one dissent, and that would be Steven Mirren asking for 50 basis points or more. There's a case to be made that there might be 6 dissents. That would be 3 dissenters for more than 50 basis points would be Mirren, Waller, and Bowman, and possibly as many as 3 dissenting for no move at all. So it could be anything along the way. But the bottom line is they're going to cut rates 25 basis points.
Yeah, the bottom line is that maybe 25 basis points. But actually, if there's, dissenters asking for 50, maybe that's where the market then goes to next. What do you think happens from after tonight to the end of the year?
Yeah, that's going to be the big question during the press conference is where do they go? Exactly. Because if we get those dissenters on the other side saying we don't want to move today, that could be a break on the idea that we would get another move in October and another move in December. So that's really the open question. We know we're going to cut today. We'd like to hear from them why they're cutting and maybe get some kind of guidance as to what comes next.
Yeah, I mean, look, the dollar is at its weakest since early 2022. There's a number of people saying that, the S&P is overvalued. Like, what are we missing in some of the conversations? How politicized is the Fed?
They're very politicized right now, and I think that would show up with the dissents. But I think the biggest thing we're missing is we talk about this low payroll growth in the U.S., 29,000 jobs over the last 3 months, 22,000 jobs in August. But what we don't talk about is how many jobs should the U.S. be making. That's largely a function of population growth. And with population growth is about immigration. And with the border closed and with deportations up, there's an argument to be made that the population growth in the U.S. is the lowest in approaching 100 years. And if it is, we might only need 30,000 jobs a month in the U.S. So we don't have the labor slack that we think we have. And if the Fed's going to be cutting rates into this, assuming that we need to be creating more jobs, they might just be creating more inflation. And that's the risk. And that's kind of the thing we need to discuss that we're not. Everybody's afraid to discuss it because it's Trump's signature achievement. And they don't want to get on his bad side by saying, that maybe closing the border is a bad thing for the economy.
But is there any work around that?
It's hard to say because the Fed can't open the border. You could also argue that it's okay if we have slower population growth, if it's from immigration. But then we need to adjust our thinking that maybe 30,000, 20,000 jobs is fine. But we're not there yet. Everybody's looking at these jobs numbers and saying they're bad because they're looking at historical reference points when we would have millions of people coming into the country a year as opposed to practically nobody coming into the country right now.
Jim, when does the AI, I don't know whether you want to revolution or actually show up, the investment that is going into AI, where does it show up in numbers?
It will show up in the numbers probably in GDP because of the build out. GDP is production and building out in the production. Will it show up in the companies that are spending the money, getting it back in revenue? Probably not. Bill Gates had a famous line about the technology in the late 1990s about the internet, that over the next 2 or 3 years it'll deliver less than you think. And over the next decade, it'll deliver more than you think. And I think that precept will apply with AI. I am a big believer in AI. I think it will be as big as the internet, but not in 26 or 27. It might be more of a 2030 and on story.
Jim, and when it comes to financial conditions, it does seem that the Trump administration basically wants to ease financial conditions for anyone around the world who needs to finance in dollars. It seems basic, but is that a fair assumption?
Yeah, I think it is a fair assumption. And on the flip side of that, they've got those easy financial conditions. We got an all-time high in the stock market. We have interest rates falling in the U.S. That's part of the reason that the dollar is coming down is because our interest rates are coming down. I think it's interest rate differentials that is driving it. We've got low volatility in the U.S. So you've got about as easy financial set of conditions that you've had any time in the last couple of years right now in the U.S.
I mean, the damaging trade war seems to almost have vanished from investor expectations. Is that, is that because they're focusing on the wrong thing? Are they at least mindful that inflation could go up, or are we seeing a bit of tunnel vision?
Yeah, I think it's more the tunnel vision thing. The first in April after Liberation Day, everybody said, wait till you see the inflation that's coming. It didn't materialize. And then they said it's not going to come. And I've been saying, wait till the spring. I think that you will see that those prices were going to be filtering through. The reason it's been so slow with the inflation is there's still a lot of stuff on the shelves that was brought into the country before tariffs. But once that inventory of pre-tariff stuff is worked off and we only have tariff inventory left, I think you're going to start to see prices move up. So probably spring into early part of the summer, I think you're going to see goods inflation much higher than it is right now.
Talk to me about the Mar-a-Lago Accord. How much of that has actually been achieved?
I think most of it has been achieved. The idea that we were supposed to get Europe to pay 5% of defense, maybe the possibility of a sovereign wealth fund. We're seeing that with the Intel merger, Intel agreement, and possibly with TikTok and some of the other agreements as well, too. And as far as, the rest of the Mar-a-Lago Accord about a reorientation of the global trading system driven by tariffs, it's largely happened. We talked about it a lot in the spring. We don't talk about it now because it's kind of there now. It's what we're doing.
But so what does it mean? I mean, there was so much anxiousness in the markets about repercussions, second round, third round effects. Have, exporters now absorbed some of the costs? It seems to have normalized. And I'm not sure whether it's because something ugly happens and everything's been delayed, or whether actually we were just much more supple than we thought.
Yeah, I think early on, you saw some exporters, both exporting countries and exporting companies, absorbing the cost of higher tariffs. But that was probably a 30, 60-day phenomenon in April, maybe into April, May, and June. And now because they didn't understand tariffs initially, so they were afraid and were protecting market share. But now that they're starting to get an understanding of them, I think you're going to start to see them start to push those prices back through. And that's why I think it's ultimately going to come back through in higher prices in the United States by, say, spring or early summer.
Jim, where do you see the U.S.? And when you look at the U.S. economy now and you see it in a year, given what you've said on employment, and the real question is actually how much, employment could we have? What else do we get wrong?
I think the inflation story is another one that we're looking at. We're 5 years past reopening the economy, not even the lockdowns, but reopening the economy. And we still can't get core inflation under 3%. So all this talk that we've got inflation solved, inflation fixed, these numbers that we currently have now, if this was pre-COVID, would have been a wholly unacceptable set of numbers and a wholly problem of inflation. But now we're saying that this is victory. I still think we're in a stickier inflation world. Not an 8-10 Zimbabwe world, but more like a 3-ish% inflation world. But that gets to Donald Trump's, famous thing that he wants interest rates at 1%. If we're in a 3-ish% inflation world, maybe about 4% is around fair value where they should be, and not where they should be, where he wants them to be around 1.
Do you think we should change the mandate of the Fed?
I don't know if that necessarily has to be the case, because the Fed is unique with its dual mandate of, keeping employment as high as possible and keeping inflation as low as possible. I would be in favor of maybe pushing the Fed towards only the dual mandate, because you always hear people talking about the third mandate being financial stability or something else. And I think that that's where the mission creep comes in with the Fed. But if we were to say, no, these are the only two things you need to do, don't worry about these other things, that would probably improve the Fed.
Jim, I know you spend quite a lot of time also thinking about, the energy complex, what's happening with oil, and that seems to be really bifurcating. It's people say, look, we're in a supply glut. Others saying that the complete reverse. Many question marks about China. I mean, does it just feel we're focusing so much on the U.S. economy, but actually does the rest of the world feel quite uncertain?
Yeah, it does. I mean, it looks like, Europe is much weaker. We've got an issue with oil right now. Because of the weakness of the rest of the world, we have oil prices down. And then you've got the uncertainty that we're talking about trying to get, Russia back to the table to get a peace deal with Ukraine. And the only real leverage that we have would be to sanction the energy industry in Russia. But nobody wants to do that because nobody wants higher energy prices. So we're kind of caught in there. And then the oil market, ironically, has not been doing a whole lot of anything. It's been meandering sideways with low volatility, during all this uncertainty, but I think it's getting set for a break one way or the other. If I had to guess, I'd say it would be higher.
Jim, I'm not sure what to do with China. So we have these headlines, a Bloomberg red headline, which means that it's an important one. China is telling tech companies to stop buying Nvidia's AI chips. Now, this is according to the FT. So we see the two presidents, President Xi and President Trump, wanting to get on the phone, possibly a summit before the end of the year. But then you have, especially on semiconductors, these kind of like loggerheads. Does that have a meaningful impact?
It can have a meaningful impact because Nvidia is the leading edge right now of the AI revolution. Their Blackwell chip is really what has been pushing everybody into these data centers. That's been giving us the AIs that we've all been using. And now they've been getting, caught up in an issue with China because China wants to buy some of those chips, and we won't let them buy the highest end chips. And now that they're starting to push back on saying Nvidia's got difficult trade practices, Jensen Huang is with the president at the state dinner tonight. I'm sure they're talking about it. He's going to talk to Chairman Xi at the end of the week. And this is kind of coming to a head right now. What's going to happen with Nvidia and what is going to be the policy between the U.S., China, and Nvidia?
Are you going to the state dinner?
No, I'm not.
It's the place to be, Jim.
I know,
we need to get an invite. Jim Bianco, President Macro-Strategist at Bianco Research. Now, let's bring you some other stories making news today. Thank you, Jim. The man accused of killing Charlie Kirk has appeared in court charged with first-degree aggravated murder. Now, prosecutors say they intend to seek the death penalty for Tyler Robinson. Kirk, who was a conservative activist, was shot dead while speaking at an event in Utah last week. And the man accused of killing the healthcare executive, Brian Thompson, will not be charged with first-degree murder after a judge ruled that prosecutors had failed to show he'd committed an act of terrorism. Instead, Luigi Mangione could face a second-degree murder charge and 8 other counts, while Brian Thompson was shot dead last year outside a hotel in New York where he was due to speak at a United Health event. And U.S. safety regulators are looking into whether Tesla's electric door handles are faulty. It follows a Bloomberg News investigation which found that people had died or been injured after getting trapped when Teslas lost power. Well, regulators have received more than 140 complaints since 2018 relating to Tesla doors getting stuck or malfunctioning. Doctors also say that Lilly's new obesity pill will have a far-reaching effect on how obesity is treated, as it achieved a meaningful weight loss of 11.2% in a clinical trial. Now, for more on this and other news in the health and consumer space, let's talk to our reporter, Ashley Furlong. Ashley, thank you so much for joining us. Look, 11% doesn't sound like much, but doctors believe it can actually be a meaningful impact. Why?
It's really interesting because we've seen with Eli Lilly's Zepbound, 20-something% weight loss. Yeah. That's what you kind of expect for a pill as well. Doctors are saying that's not actually necessary. Patients don't need that massive weight loss. What they actually need is something that might be more convenient to take, so a daily pill. And when we compare it to Novo's pill that's they're also developing, it seems like Lilly's pill, it needs less sort of requirements around when you take it with food and drink, so it might be easier to take. And then Lilly's pill is also easier to produce, potentially, than Novo's pill. So that could also impact the price point. So if you have a cheaper, easier to take pill that still leads to a significant amount of weight loss, that could really be good for a much broader range of patients.
Do we know anything about the side effects? Or
it seems to be, yes, it seems to be broadly, I'm not sure about the muscle mass loss, but it seems to be very broadly similar side effects to the shots. So we're not necessarily getting no nausea, those horrible other side effects. Those are not completely gone yet.
Okay, talk to me about GlaxoSmithKline. So they pledged to invest some $30 billion in the U.S. This is the kind of deal that Donald Trump loves, especially when he shows up in the U.K. for the state visit. What more do we know?
So we know that GSK is really trying to show Trump that they're willing to produce drugs in America for American patients. And this is what we've seen across the board with multiple drug makers announcing massive investments in the US. They're really trying to say to Trump, look, we don't need tariffs on pharmaceuticals. We're going to produce our drugs in the US. The complicated bit is that these drugs will probably not be actually produced. These facilities won't come online until a couple of years' time, which might be, the end of Trump's term. So, it's really very much about signaling to Trump that you're on board with him. GSK is still saying it's still investing in the UK. It still believes in the UK. But we've seen they're putting the money in the US.
Yeah, we certainly have seen that. So the Nestle chairman, I mean, in other news, this was also like a big developing story overnight, because the Nestle chair is stepping down after coming under pressure from investors. I mean, the urgency, is it linked to the fact that the CEO left after a scandal?
Very much so, very much so. So the CEO left after an undisclosed relationship with an employee, and there were lots of questions around what exactly the chairman knew about that relationship and the investigation.
Yeah.
But more broadly, Nestle is under a lot of pressure. So its volumes are down, it's having difficulties in China, the unprecedented sort of management crises over the past year. It has, had 3 CEOs now in the past year, when, decades before that would be completely unheard of. The share price is down. The company really needed a clean slate. Investors were looking for something new, a new chairman, a new CEO, hopefully put this all behind us and move forward, but we'll see what happens in the next couple of months with that one.
Is it just because the companies are so big and in a kind of global tariff and trade war,
exactly.
It's difficult to manage,
yes,
right?
So that's also, so it has its own internal problems, and the consumer sector is having its own problems. But as well, it's got tariffs, it's got the global economic situation. So there's multiple challenges for Nestle and for companies like it.
Ashley, thank you so much for coming on. Ashley Furlong there with the very latest on GlaxoSmithKline, of course on Eli Lilly and Nestle. Now, Bloomberg also understands that China has released a Wells Fargo banker it earlier blocked from leaving the country. This comes ahead of Friday's call and potential in-person meeting between President Trump and Chinese counterpart Xi Jinping, with the U.S. President Mao Zedong was barred from leaving China after officials there said she was involved in a criminal case that was under investigation without giving details. And staying with corporate news, some of Jaguar Land Rover suppliers in Europe have been forced to pause or scale back production. Now, that's as a cyber attack more than 2 weeks ago is still disrupting production. Well, JLR says its factories will remain closed for at least another week while it continues to deal with the fallout. One of its exhaust suppliers in Germany has put workers on holiday or on short-term work. And then the ticket-selling platform StubHub has raised $800 million after pricing its IPO in the midpoint of the marketed range. Well, the listing gives StubHub a market value of more than $8.6 billion. The shares are due to begin trading in New York later today. The chief executive, Eric Baker, will be on Bloomberg Tech just after 4 p.m. UK time. Coming up, home and business security firm Verisure aims to raise more than 3 billion euros with an IPO in Stockholm. We'll hear from their chief executive next, and this is Bloomberg. Welcome back, everyone. Now, security firm Verisure aims to raise more than 3 billion euros with an IPO in Stockholm. Now, proceeds from the offering will go towards strengthening its balance sheet and fund the acquisition of ADT Mexico. Now, the highly anticipated listing could be Europe's largest such deal in 3 years. Well, with us now is Lally, the chief executive of Verisure. Thank you so much for joining us. First of all, congratulations. You'll be Europe's largest IPO in 3 years. I mean, this is not nothing. It's quite a big deal. What gives you the confidence to launch such a large IPO in Europe when so many are going to the US?
I think for us this is, next logical step in the journey. I mean, we sold our first alarm system 35 years ago. Like, it's been quite a long march. I took over as CEO more than 11 years ago, and we always knew that one day we'd get to a level of scale and international presence where the natural home of the country would be public markets. We're now 5.8 million customers, 17 countries. We're about to open Mexico, as you noted in your earlier remarks. So we've come a long way from being a small Swedish alarm company. So we think this is just the logical step next.
Do you have a date for your listing?
Next 2 weeks.
And what does that change for the investor base going forward?
I think it's going to, in a way, diversify us. We're going to be exposed to a broad range of Swedish and institutional investors who hopefully will be with us for the long term. That's very important because Verisure has always been a long-term growth story. Yeah. I mean, if you look at track record, more than a decade of double-digit revenue and recurring revenue growth. We've actually guided to about 10% annualized revenue, recurring revenue growth in the medium term. That's going to continue. Again, the reason is because there's a basic penetration point. penetration of monitored security systems in our footprint is about 4% approximately today. That compares to the US at 23%. So you look at that penetration and you say, well, there's just a big runway that we can go after.
But, I mean, there's a number you have a number of competitors, right? There's a number, it's an industry where you have many entrants and many players. Why do you succeed, actually, in countries that matter? Like, what's the secret sauce to making it happen?
I think there's three things that are in our playbook. I mean, the first one, which people often underestimate, is the importance of technology and innovation. So we're vertically integrated in our own technology stack. We spent last year about 150 million on our tech program. That's about 1,700 staff. It's engineers, it's programmers, it's designers, it's product managers. We've got 3 technical centres. The largest is in Malmö, Sweden, where we started, Madrid and Geneva. What they're basically producing is, we believe, superior solutions. And you know, we've got a relative scale. We're 5 times bigger than the number 2 player. We think, in a way, it makes it easier for us to afford that scale of technology investment.
But is it pricing? Is it marketing? There must be something that you're doing better.
Well, I think it's better solutions, and we're therefore able to invest significantly behind those innovations with strong marketing support. We spent about 240 million euros last year on demand creation. That's about 7% of sales. That turns into very strong levels of brand awareness across the key countries. But more importantly, what it means is that we take about 2/3 of the net category growth. We actually think of ourselves as like the market maker. And that's complemented with a very strong sales organisation. So we have about 12,000 security experts in the field. I think it's the biggest sales force in Europe.
You have quite ambitious growth targets. We talked about the acquisition in Mexico. How much more acquisitions do you want to do compared to organic growth?
I mean, the last piece of M&A I did was 8 years ago. It's actually not really a core part of our plan. It's always been a tiny part of the growth. We view ourselves really as organic growth compounder. Mexico, actually, it's a bit of an outlier. We had been looking at Mexico as a greenfield entry. Already had a team, already had leased a building, and then JCI created this process, and we looked at the Mexican asset, and it was a good quality asset. Generally, when we look at M&A opportunities, the companies that we look at, they tend to be less attractive. They tend to have lower profit, they tend to have higher attrition. The Mexican example was a bit of an outlier. So we've always told investors, don't view the Mexican move as a change of strategy, right? We're still going to be, very much focused on organic growth.
So prior to this, you were 26 years at Procter & Gamble.
I was.
So how did that shape the leader you are today?
I think I loved my time at Procter & Gamble. I loved the talent, I loved the culture, I loved trying to serve consumers, right, in a better way. I've tried to bring that consumer centricity to Verisure, along with an amazing team. And actually, I think my P&G colleagues would recognise the P&G playbook in Verisure. It's about innovation, it's about building a brand and advertising, and it's about great sales execution, and it's about having a great customer experience.
What's been the hardest, final question, because I know you have things to do after this, but I can speak to you for a long time. What's been hardest, actually, in preparation for the IPO? Have you had to change the board? Have there been changes on the leadership level?
I think, in fact, we've been preparing for this move for a long time. We've had a lot of publicly traded debt. I've done quarterly earnings calls for bondholders for a decade. I think I've done 44 of them. We've always tried to prepare to one day be a public company. And so internal processes and so on were always geared at that level. Remember, although we're a private equity-backed company, we've had the same sponsor for a long time. This has been an 11 to 12-year relationship. So we've always had a long-term view. Now, board composition is changing. We've increased the number of independent directors over the past few years. We had Andrew Barron, Dominique Reniche as our senior independent. We brought Graham Picaithley, the former Unilever CFO, on board as our audit committee chair. And we recently appointed Sara Arval, highly respected Swedish executive and board member. So the board starts to get more independent. And obviously, as the as the institutional investors sell down over time, the board composition will change further.
Austin and Lally, thank you so much for joining us. Austin Lally, the chief executive of Verisure. Bloomberg Surveillance is on the road today. Of course, it's Fed Day. They'll be broadcasting from the Bank of America trading floor. And the chief executive, Brian Moynihan, will join them at 1 p.m. UK time. Up next, Bloomberg Brief, and this is Bloomberg.